Ghana's external debt rework. Do we have a deal or we don't? And as you know, we've been under the IMF for quite a while, but now it's come to crunch time. Remember the time when we always had a conversation about the domestic debt exchange? It's now time for the government to negotiate with our external creditors, and it's becoming a pretty uphill task indeed. We've been reporting this week that the negotiations with external creditors did hit a snag. So, are we approaching a deal or we are not? What really is at stake here? And we need to talk about that because there are few numbers to crunch. $1.2 billion is at stake here. We're talking about the total disbursements to us from the IMF. And this number is important. It's the reason why we are even staying afloat, many will say. It's the reason why the cedi, yes, is depreciating, but it's not as bad as many had anticipated. This is a huge amount indeed. But as you know, there's another number that is important for us to consider. $360 million. That is the next tranche. And that is a tranche that we need now. And we need to cross this hurdle with our external creditors to get this money in the bank. This money will go a long way to help us. Let me show you why that is the case indeed. This is a very important matter for our government, but also for our economy. And as you see there, there's a few hurdles that we need to cross. One, staff level agreement is one that is green, we have that. But necessary financing assurance from our external creditors is what we need, we don't have. That's why you see that in green. You also have the IMF board approval that must come. For it to come, we need to cross that hurdle in number 2. That's the point about necessary financial assurance from our external creditors. That's where we are now. The finance minister himself is leading the conversations, leading negotiations in Washington on the sidelines of the spring meetings to try and get a deal for us. This is a big deal. Many will say the very survival of this economy depends on reaching a deal. The monies involved are huge. And again, another number to throw at you as we consider what's happening here. 10.5 billion. 10.5 billion is how much relief we need. We need this to cross that threshold for the board to sit and consider whether to release that tranche I talked about earlier or not. This is jaw-dropping number for a country like Ghana, but if you look at the next number I'm going to show you, we'll tell you the story of why this has become such a very important subject for a lot of people. And let's talk about this, because if you look at the strategy that the finance ministry is currently following, they are pursuing a bilateral arrangement, which we know they've placed a moratorium on of 5.4 billion. But when it comes to the Eurobond, they're talking about some 30 to 40% haircut. Nothing compared to, for example, what we had in Ghana. And that's why it's going to be quite a tough negotiation to have. Considering the figure I told you earlier of 10.5 billion relief that will require out of the 13 billion that we have with the Eurobond holders that we need to renegotiate. This is an uphill task. Also because we know that this deal in principle that we reach in January will be worth very little if we don't cross this Eurobond hurdle with our bondholders. And we know now that some of the bondholder groups are holding out. In other words, they're telling us that they don't agree with what we've offered. The offer on the table from Ghana, they do not agree. And so they are holding out. And we've seen already Reuters, Bloomberg reporting that there has been a rejection of the proposal on the table. The finance ministry came back with their own statement on the matter that I will bring to you pretty shortly. But that holdout is one that we need to cross. The finance ministry tells us when we heard the story about the holdout, the rejection from the bondholders, that, listen, this is not a failure. It is just part of the process. And significant progress is going to be made. But they are going to regroup, try and tweak the proposal, and go back to the negotiating table. As of tonight, remember that we are in Washington, one of the very few media houses there monitoring this play out. And we know that the negotiations have resumed, right? But what is on the table now? Is it still between the 30 and 40% haircut that government is proposing? George Riafe will join me from Washington to update us on this. But government is remaining absolutely confident. Why is this one that we need to be very careful about? Because Argentina's story tells us that if you do not get this right, it will have devastating consequences. You know what happened in Argentina, right? There was a time, there was actually a ship on the shores of Ghana that was frozen and seized by these external creditors because Argentina owed them. And Argentina was failing to get a deal. It took them 9 years to get a deal. They defaulted in 2001. They only secured a deal in 2010. It is a scary place to be. That is Argentina's story, one of the most famous ones indeed, because Ghana got involved somehow because an Argentinian warship, I believe, was a subject of a court action in Ghana that Argentina had to give up to the external creditors. If we don't get this right, that is a possibility. The creditors will begin to get court actions to seize our assets abroad. That is what we want to avoid. That is why this is absolutely important. This is no child's play, and it has serious consequences for us. And then there's a Zambia case. They defaulted in 2020, and guess how long it took them? 4 years to secure a deal with our external creditors. They drive a hard bargain. And that is already what we are seeing, but government is very, very confident that they can strike a deal. We can only remain positive, and we'll get the very latest from Washington when George Biafre joins us. There's some positive news though. In the midst of all this challenge that we've been talking about, or whether we get a deal or not, we're seeing that some of the indicators are beginning to improve. Because if you go to last year inflation, we are at 45%. Right now, we are talking about some 25.8%. In fact, the IMF is predicting that this is going to drop even further by the end of the year. They're even predicting that next year we may return to single digits when it comes to inflation. And all the indicators, we are going to grow more than 4%. Again, another projection that has been done. So there's some positive news there. It's not all gloomy, but trust me, as I told you earlier with the Argentina case, if we don't get this deal, things can get pretty bad very, very quickly. And this may be eroded. And I'll show you why we need to arrive at the deal to keep this trajectory, this decline in inflation continuing. As you know, it's been fluctuating a bit, but we want a consistent period of downward trending of inflation before we can celebrate. Depreciation of the city. Last year, minus 22% depreciation is what we saw. Now we're talking about some 6.8. It is bad, but it can be worse. And if you look at it again, another indicator that we've been checking, the public debt stock. And this for me was important because in spite of all the domestic debt exchange we've done, our debt stock hasn't improved that much. Because we went to the IMF in May last year. At that time, we were at 579.5 billion. We are talking about some 610 billion there. That isn't a great change. If you look at the dollar term, you'll see that it's not a great change. So we are not doing much. We haven't reduced our debt stock that significantly. And that is why there's a lot riding on striking this $10.5 billion deal to get that relief, because that would then be very significant when it comes to this picture that you see on your screens. Okay, now the implications. If we don't get this right, if we fail to get the deal, no financial insurance on the external creditors equals no $360 million from the IMF. Trust me, this is, many will say, oh, for a country like Ghana, we should be able to survive without this. But if we don't get this, it has other implications. You need this. Remember the key reason why we went to the IMF? To support our reserves for balance of payment support. If you don't get this coming in, you're possibly going to have a challenge with your city because you need the dollars in to shore up the city. Depreciation might kick in. If depreciation kicks in, it will have impact on inflation. If it does have an impact on inflation, you have a reduction in your external reserves. It is going to be a combination of factors that we don't want to have in an election year, and the government certainly doesn't want that. With loss of forex too will become an issue for you. If you lose the forex, that then leads to everything else that I've said at the end there. So appreciating this, we need to get a deal. My guests will join me. Are we getting a deal or are we not? Why many people say Ghana is an exception, right? And that the world powers will really do anything for us. Is that really true? And can we rest easy that it may prove initially to be tough, as has been reported with the holdouts, but we can cross this hurdle and get to the finish line? My guests from around the world will join me. George Biafre in Washington, Red Intelligence's own analyst, will join me also with his own thoughts on this. Stay with me for a conversation right after this. And thanks for staying with us here on PM Express. And I'm going to be taking you straight to Washington pretty shortly. But PM Express is always brought to you by Syntex Tanks. It is strong, it is tough. Alumobites experience greatness in every moment. Ghana AIDS Commission, Pepsodent, every smile matters. And Syntex Tanks is a tank for you because wherever you are in Ghana, they'll make sure you get the water. It is the first to introduce the double layer tank, and now you can have as many layers as you want. Syntex Tanks is first to introduce the white inner layer tanks in Ghana. We now introduce you to the customer specs order, which lets you order any color and size of preference. Syntex Tanks gives you the longest warranty, 7 years, which no other tanks gives you in Ghana. So whatever your water consumption, size of project or demand, choose Syntex Tanks. The agents are nationwide. Call them 0244-335-168. Shop online at syntexgh.com. A strong, a tap, and I always recommend to you the Pepsodent because they have pro-fluoride to fight the cavity and the challenges you have that may create holes in your teeth and all those invisible challenges that you may have. That's why you have to brush your teeth morning and evening. It prevents the cavities and all in there. And it comes with various packs, 175G all the way down to 12G sachet, so you can always get what you can afford at any time. Pepsodent, every smile matters. My guest joining me for a conversation tonight, George Yafe is live in Washington. My colleague with the Joy Business Desk is joining me for a conversation on this, and he's going to give us the updates on this. Theophilus Achampong, Dr. Theophilus Achampong is an economist and political risk analyst, also joining me with his thoughts on where we are with these negotiations. Professor Godfred Bokwe, an economist and professor of finance at the University of Ghana Business School, and Mark Bullhorn, and he has been joining us over the time to look at where we are. Ghana has been going through the process, and I'm delighted that Mark can join us again. He's a senior credit research analyst at the Red Intelligence. Hello, Mark. Thanks for joining me. Prof and Doc, thank you all for joining me on PM Express. George, let me start with you first. Do we have a deal?
Again, from multiple sources that have engaged as we speak right now, when it comes to the Eurobond holders or the commercial creditors, there isn't a full deal in place. Again, based on more crucial sources that have engaged, what I understood was that when it comes to the foreign holder groups, it appears that some preliminary deal has been reached, but these two other interest groups, the Africa Group and then one other institutional investor, had some concerns, and it appears that there is a no deal, if I can use that expression. But even with respect to this deal, let's break it down. There should be first an agreement in principle. It leads to a memorandum of understanding, and then signing of that MOU. Mm-hmm. So when it comes to the commercial creditors, it was about that MOU for all the investors when it comes to restructuring that $13 billion or a little over $13 billion. Again, based on very credible sources that have engaged, not anywhere connected to government. It now appears that we have a deal in that place. But again, one critical thing, Evans, is that it appears that we may not have the final say when it comes to whatever deal we will reach, because whatever deal that we reach with these commercial creditors who are holding our Eurobonds, we also need to take it back to the IMF, because don't forget that this whole program is about debt sustainability by 2028, reaching to a certain level. And if the fund thinks that, listen, whatever deal that you struck with these institutional investors will not result in your debt going down to a certain level, they would not give an approval to that. Remember, even when the MD came to Ghana and we had an interaction with her, she actually advised government that, listen, be tough and don't allow these commercial creditors to twist your hands.
And so, George, you make that point, also knowing what I just showed, that the domestic debt exchange program didn't really make a significant dent in our debt stock. So there's a lot riding now on the external creditors to get us to a place where we can say we're getting to a sustainable debt overhang.
And let me use my finance professor and lecturer way back in school choice of words, who will say that we had our way in the domestic debt negotiations, but when it comes to the external negotiations, these are quite tough people who want to ensure that they are not in any way shortchanged with respect to whatever we put across. But even so, when it comes to the Eurobond holders, it appears that we've not been able to reach a full deal with all these institutional investors. But again, now dealing with what government is saying, there's been some rework to the proposals, and they are hoping that before this IMF meeting ends, they might be able to have reached a full deal with everyone when it comes to the agreement in principle.
Yeah, and George, because you're there in Washington, you've seen the negotiations happen, you have your sources, you're very close to our team there. Tell me, what's the offer on the table? What's the offer? What are we proposing? Is it still 30 to 40? Are we extending maturity? What is it?
Evans, maybe people from Red and maybe Prof as well may be able to tell you because they are outside. One critical thing that when they went into these negotiations, they signed a non-disclosure agreement where none of the parties, either official or unofficial, should disclose the term, because don't forget that government was able to reach a deal. And again, that's what we picked up, that when it comes to the bilateral creditors, it appears that there has been an agreement on the memorandum of understanding with respect to how to restructure the about $5 billion debt. Why has the statement delayed even? That's the question you asked yourself, because this thing we understand that was struck somewhere in February. Now, what we're also picking up is that whatever wording of that statement, everybody on the official creditor committee should agree to that. And that is why that has delayed a little bit. But when it comes to the bilateral creditors, it appears a deal has been reached. I think that the biggest challenge now has to do with the Eurobond creditors, or those who are holding the Eurobond debt. And again, that non-disclosure agreement meant that nobody, like in what the economists will say is the prisoner's dilemma, nobody outside or which of the other persons should know whatever agreement that you are going into these creditors. And that has made it very, very difficult even off record to get what is on the table, because the fear is that if I disclose this to maybe Morgan Stanley or maybe another investor, they would then go and compare notes and say that what you have presented to me is not good enough. And another thing that Evans...
and John, just a second, but the negotiations have resumed following the challenge that was reported earlier.
Yeah, that is what I picked up. There's been some unofficial engagement going on.
Stay with me. Stay with me. Let me bring in quickly Dr. Theo Chaplin. Doc, do we exaggerate when we say almost everything is now riding on getting a deal out of these negotiations happening where George is tonight?
You're not exaggerating. And good evening to your listeners. The reality is that you've got $20 billion of external debt that you're restructuring, right? The Eurobond is 13 out of that 20. So that's roughly 65% of that. And so it's actually quite substantial in and of itself. The other fact that we also know is some proposals were made by the government to the commercial creditors, the Eurobond guys. And then I think the government was quite, in my view, hasty to actually announce to the market to say that, we've got quote unquote an interim deal. When in reality, it actually is not a deal, because it has to pass, importantly, the debt sustainability metrics and the benchmarks, right? So the market now comes and says that, well, you don't have a deal. So you see now the government then also issuing a number of statements, including the tweet from the Office of the Finance Minister on the 15th of April, which says that, Ghana and the bondholders reach an interim deal, and this must be tweaked, blah, 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 and it goes on and on. And then even today, you read Bloomberg and other platforms, and again, the statement or the rhetoric coming from the government is saying that, well, quote unquote, this is not a failure, but it's an ongoing process to arrive at an agreement that is consistent with the debt threshold. Until you have an agreement that meets those important criteria, the debt sustainability analysis, whatever you've agreed with your private creditors, in law you will say what is null and void, right? You cannot really bring that to the table because the IMF is going to reject that. And we've seen that in Zambia, even in Sri Lanka, and in other places, as well. So I think the process is still ongoing. But for me, I think it's important that the communication around that is quite clear, and the government desists from issuing any statements that further would spook the market when the reality really is that you are nowhere close to getting a deal that meets that comparability of the debt treatment, threshold. There's one or two other points around this where, again, you look at the news wires and the original interim agreement that the government says the bondholders had agreed to a 33% effective, nominal haircut. And then there were also other conditions where if, for example, the economy of Ghana ends up performing much better than expected, then they would have paid more in terms of interest payments and all of that. Very much similar to the deal that, Zambia is got. But again, when you work the numbers out, it looks as though it does not meet that critical comparability of debt treatment threshold. And this is where things are at the moment. I finally also think that even when you work out, whatever the haircut is, and you work the debt numbers, I struggle to see how we are going to still get to that 55% debt to GDP threshold by 2028, especially given the headwinds that we're seeing still with the economy and the growth not picking up as we expect, and the external pressures and all of that. So I think that target 55% is a moving one. I doubt that we're going to meet that. You look at the IMF's own projections for Ghana in the document that they produced last year, and in their own projections by 2026, 2027, the total public debt actually is still around 88% of GDP.
I see. And Mark, I want to bring you in here. Red Intelligence, have you picked up anything about where we are along the spectrum of arriving at a deal? Are we any closer to that deal?
I would definitely say that we're closer. You had the announcement of the deal made, and then you had a similar development to what we saw in Zambia a few months earlier, is that the IMF did remark that this deal did not satisfy the threshold values in the debt sustainability analysis, which they do together with the World Bank staff. So my understanding from the statements and what we hear from people involved is that they're now working on just doing this fix. So I think this should be a relatively easy operation, and that should allow for a executive board approval of the second review with the IMF and the concomitant disbursement of 360 million in June. So the final step for the deal then would be just the comparability of treatment, which is essentially that's approved by the official creditor committee. We don't think that's will be any great difficulty. China is less engaged in Ghana than, for instance, Zambia. So the final, in addition to that, Ghana the government also needs to get a deal with the non-bonded private creditors. So that's maybe potentially a hurdle. There's an Afrexim bank loan that was extended in June 2022, which the government has previously said that it wanted to try to exclude from this debt restructuring, which I think would be very difficult. So that could be a potential hurdle, but that's not my base case scenario.
So for the external creditors, do I hear you say that there's some level of confidence that we should get a deal?
Yes, I that's the general view is that this is very close. There's just a few fixes that will be needed. That's similar to in Zambia, just essentially move some of the payments around to just get below the threshold that's in the IMF's debt sustainability analysis.
And that's an important point, but it also comes to the options on the table, right? I mean, if you look at international wise, Bloomberg and Reuters, for example, reporting this week that one of the options on the table is to retain the original value of the bonds with a longer maturity and lower coupon. What's your own intelligence telling you about what we are offering to these bondholders?
Well, there's some external creditors that are very averse to taking any normal haircut, that prefer to extend maturities instead, just to get the payment over a longer time horizon. So that's one of the options in this potential deal. And that's capped at 1.6 billion potential in that. And then the other option is essentially having 3 different bonds according to a specific quota. So I think that can solve the kind of differences among the private sector creditors. There's reports of some differences between the sort of West African regional banks that were holding the Eurobond and the external, well, the creditors in the US and Europe. So I think it looks like they've come up with a good solution to that problem. So I think it's more moving around the payment streams for the other options, which has a higher degree of near-term payments, because that's where the IMF's debt sustainability analysis has a 7-year forecasting horizon, during which the external debt servicing has to be below certain ratios in terms of exports or government revenue.
Professor Bopun, that definitely is a positive take and a very confident, I guess, look on the negotiations happening so far. And if you really look at the recent projections that we're seeing from the IMF, it looks like our economy is on the uptick. They are projecting inflation going to trend consistently downwards, end the year at around 15%. And they're even projecting that growth is going to return to above 4% next year. I mean, these very positive macroeconomic indicators the projections that we're hearing, will count in these negotiations, wouldn't it? I mean, if the economy is projecting to grow by that much, considering where we've been, that could help the government in convincing the creditors to sort of take a second look at the offer on the table. Do you share in that confidence that the government is putting out there, that they are very confident we'll strike a deal that will significantly reduce our debt levels to sustainable levels to allow the IMF board to approve the next tranche?
Yeah, thank you very much, Evans, and good evening. And good evening to our colleagues on the panel. Yeah, certainly the outlook is positive. Of course, to us in Ghana, he is coming at a great cost. But bear in mind that if you look at the original debt sustainability analysis, the projections and all of that, to the extent that the outlook is better than that, the creditors also would want to share in that windfall, right? And it should help to moderate the level of haircut. That is where the tricky issues are in terms of value revolving as compared to plain vanilla instruments. So it's not all to the advantage of the government. Okay, so because the DSA is not static, right? So you have GDP growth projections and all the dynamics and all of that. And therefore, if you look at the case of Chad with Glencore, where they benchmark it to some extent to world oil price and the rest of them. So they are saying that, well, things could improve. If that happens, then we should be able to share in that windfall. That would also mean that government must be open to accommodate that proposal rather than a straitjacket instrument that is constant across the time. So those are the issues that you want to bear in mind. Remember that, Evans, there are 2 different levels of application here. So there's one level where government wants to reach agreement with the external creditors, but that must be consistent with the debt sustainability framework.
Yeah.
So we can have an agreement with the creditors, and the IMF will say it doesn't meet the fiscal sustainability pathway. And if you remember, on this same program, we had said that the debt sustainability framework and the timeline and the level of sacrifice that is expected from external debt relief seems a bit hard to take on the face value, okay? Because out of the eligible bonds of about $20 billion or so, if you look at the level of sacrifice in terms of relief, which is also important for the balance, the financing of the balance of payment deficit then it's very huge. And I believe that this is where the tricky issues are. Okay, so of course, we know that our external commercial holders are coming to terms with the fact that they will end up with NPV negative. They also want to cut their losses to some extent. Okay, and I believe that is where all these reconfigurations will then come in. But I think that for the purposes of releasing the third tranche, the focus has to be more with the progress we make with our external bilateral. Okay, so you remember that the trajectory has more to do with the progress we make with our external bilateral. When the staff level agreement was reached on December 12, 2022, the reason it didn't go to the board quite early was because they were waiting for financing assurance from the external bilateral through the official creditor committee, co-chaired by China and France. The first review, for which we needed the second tranche of $600 million, was tied to an agreement in principle, and that was obtained in January 2024, even though per the program phasing, this was supposed to have been done by November of 2023.
So bottom line, you don't see much hindering our access of the next tranche?
No, there's still some work to be done, apart from the IMF's own internal processes, because normally when they read the staff level agreement, there's still a lot of correspondence in ironing out the details and the rest of them before it goes to the management board and then the executive board. But we needed to have this MOU, okay, agreement on the MOU. So once that is delivered, the board will be able to approve the second review, for which we'll get a third tranche. For the next one, which is scheduled towards the end of this year, then the MOU, we have to be able to deliver the signatories to the MOU from the individual countries. I think that is where the issues are, whilst we still make progress. And I agree with the earlier
Mark from Red Intelligence.
Yes, that we are still keeping an eye on the progress that we make with the external commercial. Actually, the bulk of the relief must come from the external commercial, because that is where our exposure is high.
Really is, yes. Yes, and that really is where the bulk of the challenge is. And George Yafe, I'm just curious, in terms of government itself, what time frame is it working with in terms of these negotiations? By which date do they hope that they should close a deal and head back to the IMF and present that to them? Are they hoping that by the time the meetings are over, this is done? Do you have a sense of that? George, please unmute for me.
Can you hear me, Vance?
I can, yes.
So a lot of things are happening, and again, just to bring back one critical point that Professor Bopping made, was that some of these institutional investors and even creditors are saying that if all the projections suggest that the economy is going to pick up strongly, we need to be compensated. That has come up. Yeah. Again, what I'm also picking up again, and even engaging one of these institutional investors, just to paraphrase that person's comment, it appears that the IMF is just interested in the bilateral creditors deal. But it appears that when it comes to the commercial creditors, the IMF appears not to be that interested in it. And that is a comment that for some of these institutional investors, they are not happy. And so it will be interesting how that will play in these whole negotiations. But again, just to emphasize the point that Professor Popping made, what the fund is looking for right now is that memorandum of understanding with the bilateral creditors. Yeah,
and George, I asked earlier, if you don't mind, do we have any time frame within which we are hoping to close this deal and leave Washington?
The engaging government, I think that what they want to leave here is that initial agreement in principle with these Eurobond and commercial creditors. And again, what I've been able to pick up already is that the engagement has already started, Evans. And it had not gotten to that point where you think that these institutional investors have taken an entrenched position. So in terms of reworking the terms and getting back to them, it will not be a problem. I know that government is re-engaging the IMF to ensure that whatever deal that they reach is in line with the DSC, what we call the debt sustainability analysis. So it appears that things are progressing. We've not gotten to the extent where each of the interested groups have taken any entrenched position for you to say that, listen, nothing can be done.
Yeah, I mean,
some progress is being made.
You made a point that I want to explore a bit more with Mark. Mark, this suggestion that George is making from the sidelines of the negotiations, that some of the creditors have said that if the economy performs better than expected, they expect some compensation. I mean, is that even normal in these negotiations? And how does that even work out?
So that is called a value recovery instrument, is a term that has been bandied about. So it has been used in previous debt restructurings, most often linked to oil prices, other commodity prices. And in the debt restructuring with Ukraine in 2015, there was a GDP warrant that has, I think, that wasn't an entirely positive experience. I don't want to go into that. But yes, the inclusion of the value recovery instrument was something that was pushed by some of the bondholders. But this was pushed back by both the IMF and also the government, is our understanding. And such an instrument is not part of the current deal. I think that's a positive. It does perhaps, I think, there was enough, it was easy enough to get a deal without this value recovery instrument. I mean, it was harder in Zambia, where the net present value, where the debt relief was required, was sharper. So that's why they included that as kind of giving a bit of additional upside to the creditors in case that the forward looking, things turn out better than expected. I mean, and Zambia was tied to exports and also the sort of IMF assessment of the debt carrying capacity rather than GDP.
And Dr. Chochampo, linked to this particular one, I talked about all these indicators that are trending very positively. From what I'm listening to, is if this particular clause then is being pushed, that appears that all these gains that we're reporting may prove counterproductive if it's going to be part of the negotiating and bargaining that the creditors may be pushing.
So yes, they're pushing, but like Mark and I also indicated earlier, these value recovery instruments have actually, the government has pushed back on them.
Okay.
And so it looks like as though the investors have backed down a bit on that. So you probably would not get that included in whatever agreement in principle they leave Washington with, if they manage to get that. So that would be a bit of a difference or a deviation from the Zambia case and then a few other cases as well. And then it makes it a bit more easier in a sense to sort of manage, that debt. But what that also then means is that if you don't have those value recovery instruments, the size of the haircut that you're expecting will probably not be that big because they're not going to benefit from the potential upside, in that regard. So there's always going to be some form of trade-off that needs to be taken into account. And then the economy is improving. We've seen the macro numbers beginning to pick up, and we expect that to be sustained as well going forward. But I think what is quite important and clear is the fact that we've got two battlefronts, more or less, to deal with. The first one, which is getting the MOU and the signatures on the bilateral debt agreement, what we signed in January of this year. That is really what's really key in terms of getting the next release of the 360 million by May. Then you've got another further release around November, which Prof talked about, and that would be dependent on the Eurobond restructuring and what we get out of that. So I think sometimes people confuse the two, but it's important to unpack, right? That there is a bilateral element that we already have an agreement in principle, and what we need to do now is to get the MOUs with all the different groups, take that to the IMF, but you get 360 million. Then there's the parallel stream of the negotiations with the commercial creditors, which is going on at the moment, and it does look like some potential deal is on the table. But the critical thing is that it's got to meet that debt sustainability benchmark.
And I need to ask a question about reality for Ghanaians. And I want to bring in Prof on this conversation. Because we've talked a lot today about all these positive, the outlook is positive, the indicators are trending in a positive also. I'm a Ghanaian. Many people watching right now will listen to us and say, okay, you guys say there's a lot happening and it's positive, the inflation, depreciation is doing well, and we're expecting to grow about 4%. In a country that grows 4% in this time, like a poor country like Ghana, is doing well. But are we seeing the reality though? I mean, is there some, am I missing something here?
Yes, you are missing something because your pocket is not in the IMF supported program.
Okay.
Your stomach is not there. Where you eat is not in the program. Okay. Don't forget that inflation is trending downwards. That's good news. But bear in mind that food inflation is still very high, almost 30%.
Okay.
And Evans, this evening, depending on where you choose to buy food from, it could be as high as 47%.
Yeah.
Food inflation in the eastern region is almost 47%, right? So we could say that the numbers are trending downwards, but it's still very high by world average. It's still very high compared to our regional peers. Still very high compared to our structural peers. Is that okay? So yes, we are driven by average. We can celebrate average, but there is a lot that we have to do to ensure that this limited macro stability is maintained and we are able to sustain it before you can talk about economic transformation and inclusive productivity growth that perhaps will have your pocket in the basket. But for now, remember, we are about repairing the balance sheet of the states. Okay, and remember that we are not done yet, Evans, in terms of the adjustment process that we needed to do, because the fiscal adjustment per the debt sustainability analysis, which will pass through the budget annually, is supposed to reduce the debt to GDP ratio in present value terms from 109% to about 81%. And then you have the domestic debt also doing its part, and then the external debt also doing its part. But Evans, before we sign off, let's bear in mind that the mere fact that we conclude with our external debt restructuring doesn't necessarily mean that there will be a bottom up, okay, immediately. Because remember, we are already enjoying the relief from these external creditors already, because we are not paying the coupons. It's already shoring up our international reserves. It's already been included in the market expected and the valuations and all of that. And the reason why you see investors want to conclude this deal is that they want clarity. They want to see their level of losses. They want to move on because the government is sitting on their coupons. The government is not making any principal repayment and the rest of them. So that uncertainty, nobody prefers. We all prefer relative certainty. So I think that's the level we have to look at it from. So Evans, to answer your question, we have a long way to go to see before this development begin to impact. Remember, businesses are still complaining. They are not recruiting necessarily. The adjustment process is still going through the system. Lending to private sector is declining. And even if you look at the composition of the private sector lending, it's not going to the productive sectors of the economy. That is not going to generate growth. We have celebrated jobless growth. If you look at the GDP, the IMF is celebrating as part of the debt sustainability analysis is jobless growth, largely. Okay, that's not inclusive. And that's not sustainable. Remember that we can have these short-term gains, but if we are not careful in building on that and consistency, then we are likely to return to our vomit, because this is what we have done since 1992, or probably since Ghana went to the IMF for its first official program in 1966.
And Prof, to your champon, the positive reporting around the indicators, and another one that I read this week was that for the very first time, the projection that Ghana will end the year with the primary surplus, something that we've not done in a long time, where our revenues will exceed our expenditure if you don't count the interest payments. And I read that, I'm like, goodness me, this government is doing something really right. And that's a question I'm going to ask you. All these positive indicators and the projections, is it by design because we're doing something really deliberate, or it's attributed to some other factors? What's your reading on this?
Right. So in part from the IMF program, and then in part also from other, external factors like commodity prices going up and all of that. I think in this country, like Prof is saying, sometimes we over celebrate these macro indicators without really interrogating them. What does that mean at the end of the day for my grandmother in the village in terms of cost of living and those associated indicators? The primary balance one is an interesting one because again, if you go back the last couple of years quarters, we've actually had surpluses on the primary balance before, right? Even before you include the debt or interest servicing capacity on all of that, right? The reason why this will go up is because you're also not paying or servicing your debt. So I struggle to see why we are even celebrating it in the first place. What we should really be celebrating properly should be if the debt to GDP starts going down, where you've taken into account your principal and interest payments and all of that. That is where we begin to, but I think there's too much, in my view, too much of a bit of a fetish when it comes to macroeconomic indicators in Ghana, which often is still not reflective of the actual cost of living concerns and pressures on the ground.
Okay, and Mark, finally to you, give me your what your own predictions are, knowing what is happening right now. Do you reckon that we get a deal that will satisfy our debt sustainability agreement and expectations with the IMF, for example? And how soon do you reckon we can get that deal? First, your confidence in securing a deal.
Yeah, I think that will happen relatively quickly and next few weeks. And it's similar, the deal with the private sector, the non-bonded private sector credit holders should also be relatively quick. Might take a bit more time, but I expect Ghana to receive the IMF disbursement in June, have the IMF board approval there. So this is in line with what I have been expecting for a while, that the government and the creditors would be able to reach a deal before the election. So my concern has always been what happens after elections, what will be the commitment of the next administration coming in to this deal. And I think what we're going to see is that these, once these instruments come into the market, they'll be trading at very high rates, meaning that Ghana will not have access to international capital markets for some time going forward, I think several years. And I think that if it doesn't have that, I think there will be doubts, with the next government of the benefits of sticking with this deal.
Okay, and Prof, your own prediction, what do you think will happen? Do we secure a deal in the next few weeks?
Yeah, I think that the most important thing is when the IMF executive board would meet and then we get a $360 million. I agree with Mark that I don't think we should expect that in May. Probably we should be looking at June, towards the end of June. Yeah, but Evans, I think I don't want to say we are majoring in the minor, but I think that there's a lot we have to do domestically, right? So we are predicating almost everything on the external debt restructuring. There's a lot we have to do domestically to be able to improve the investment climate and begin to complement these reliefs with some level of foreign direct investment portfolio flows. Because we need that. Because the inflows associated with this external debt restructuring, the IMF and the rest of them, Evans, they are not enough. This economy is bigger than that, right? So I think that let's move on. And we have said from the beginning that, the government, we failed to take our destiny into our hands 2.5 years ago. Okay, and therefore we are in a box. So, Evans, this thing that we are saying, even if we get the $360 million next week, Evans, it's not enough. It's not enough.
Yeah, okay. Prof, thank you very much. Mark and Dr. Churchamp, I'm grateful that you all joined us. And George will be in touch again as these negotiations progress. Enjoy the rest of your evening.
Thank you. Bye-bye.
Thank you.